Family pension for central government employees. Disclaimer: this training material is for use in training of officials. It should not be referred as guideline of government. In case of any variance in this training material, the government guidelines, rules, law shall prevail. This educational video contains various provisions of Central Civil Services Pension Rules 1972 in a comprehensive manner. An attempt has been made to make this video an updated one by incorporating the latest changes. Attempt has also been made to cover the various provisions of pension rules. However, it is recommended to make use of CCS pension rules for more details. What is family pension? Family pension is defined as a regular monthly amount which an employer will pay to a person who belongs to the family of the employee in the event of the death of the employee. Pension is paid to an employee when he is still alive, whereas family pension is paid to the nominee or heir of the employee when the employee is no more. So, family pension is the grant provided to the family of a government employee in the event of his in-service death. It is also provided after the retirement of the deceased employee if he was on the date of death in receipt of a pension or compensatory allowance. Payable amount depends on the pension received by the government servant. It is 30% of the basic pay subject to the minimum of rupees 9,000 and maximum of rupees 1,25,000. Family for the purpose of family pension. Spouse, husband or wife, when they will become ineligible on death or on remarriage, whichever is earlier. Children, sons or daughters, when they become ineligible on attaining the age of 25 years or on marriage or on earning a monthly income exceeding rupees 9,000 plus DA, whichever is earlier. However, in case of disabled children who are unable to earn their livelihood, the age limit of 25 years will not apply. Widowed or divorced daughters, when she will become ineligible on attaining the age of 25 years or on remarriage or on earning a monthly income exceeding rupees 9,000 plus DA, whichever is earlier. However, in case of disabled children who are unable to earn the livelihood, the age limit of 25 years will not apply. Wholly dependent parents eligible for normal family pension when they become ineligible on earning a monthly income exceeding rupees 9,000 plus DA. When both parents are alive, family pension will be sanctioned in the name of the mother. The family pension will pass to the younger child only after the eldest has become ineligible due to attaining self-dependency or marriage or attaining 25 years of age. It may be mentioned that family pension is payable to a handicapped or disabled child who is unable to earn his or her livelihood without any restriction of age limit. In case of twin children, the family pension will be divided equally between them. In case of more than one widows being left behind, the family pension is payable to the widows in equal share. Where the widow becomes ineligible to receive the family pension due to remarriage or death, then her share of family pension will pass on to her children if they are otherwise eligible. When even the child of such widow becomes ineligible for family pension, or the widow had no child, her share of family pension shall pass on to the next widow. Applicability of pension to the family of a deceased government servant. Rule 54.2.1. Who dies after completion of 1 year of continuous service? Rule 54.2.2. Who dies before completion of 1 year but was medically examined before joining and found fit for government service. Rule 54.2.3. Who retires and on the date of death was in receipt of pension. Rule 54.2a. Family pension is fixed at a monthly rate and should be expressed in whole rupee. Fraction should be converted to the next higher rupee. Criteria of eligibility for family members for family pension. Spouse, husband or wife. Period of payment and conditions. Up to the date of death or remarriage, whichever is earlier. Income criteria not applicable. Childless widow. Period of payment and conditions. In case of childless widow, even after remarriage, subject to income criteria. Income criteria, the minimum family pension. Declaration regarding income is to be given to DDO every 6 months. Judicially separated spouse with no child. Period of payment and conditions. Judicially separated spouse with no child is eligible. Not eligible if judicial separation is granted on the ground of adultery and the spouse was held guilty of committing adultery. Income criteria, the minimum family pension. Declaration regarding income is to be given to DDO every 6 months. Judicially separated spouse with children. Judicially separated spouse with children will get family pension after the children cease to be eligible. Income criteria, the minimum family pension. Declaration regarding income is to be given to DDO every 6 months. Son or daughter. Period of payment and conditions. Up to the age of 25 years or until marriage or starts earning, whichever is earlier. Payable in the order of birth. Younger will become eligible after the elder become ineligible. Income criteria, the minimum family pension. Disabled children above 25 years. Period of payment and conditions. Eligible after the term of last minor child is over. If more than 2 children suffering from disorder, family pension is payable in the order of birth. The younger one will be eligible after the elder ceases to be eligible. Income criteria, the minimum family pension. In case of twin children, family pension shall be paid to both of them in equal shares. Eligibility has to be certified by the competent medical authority. Payable even after marriage. Certificate to be furnished to bank about income. As and when the disability manifests itself in a child, which makes him or her unable to earn his or her living, HOD shall be notified supported with medical certificate. Unmarried widowed or divorced daughter. Period of payment and conditions. Effective from 1st January 1998. Eligible if she is not earning her living. If eligibility occurs after issue of PPO, the spouse, if alive, or the unmarried or divorced or widowed daughter can themselves intimate the details to the pension sanctioning authority. Parents. Period of payment and conditions. Wholly dependent on the government servant when alive. Payable at normal rates only. If both parents are alive, first, mother gets family pension. Disabled siblings unable to earn their living, following the same criteria as laid down for disabled children. Family pension admissible to a beneficiary in respect of one deceased employee or pensioner is not to be counted as income for the purpose of determination of eligibility for another family pension, which is admissible in connection with another deceased employee or beneficiary. However, any other income or earning of the beneficiary under consideration will be counted towards income for deciding eligibility for family pension. Payment of family pension to more than one family members in equal share in the following cases. More than one widow. On death of a widow, her share will be paid to the eligible child. If no eligible child, then to her widow, under the rule 54(7)(a). Widow and eligible child or children from another wife who is not alive, under the rule 54(7)(b). Widow and eligible child or children from a divorced wife or wives, under the rule 54(7)(c). Twin children, under the rule 54(7)(d). Rule 54 is about two family pension. Pension due in a military and civil employment. The government has allowed family pension where the pensioner is drawing two pension for military and or civil employments. Rule 54(11). Husband and wife if both are government servants. If both husband and wife are government servants and one of them dies while in the service or after retirement, the family pension becomes payable in the following manner. Number 1, to surviving spouse. On the death of surviving spouse, children are eligible for two family pension at enhanced rate limited to rupees 1,25,000. If one pension is payable at enhanced rate and the other at normal rate, the maximum amount of both limited to rupees 1,25,000. If both the pensions are payable at normal rates, the amount is restricted to rupees 75,000 per month. If government servant dies leaving behind a judicially separated spouse and no children, the family pension shall be payable to the surviving spouse if the judicial separation is granted on the ground of adultery and person surviving was held guilty for committing adultery. The family pension shall not be payable to him or her. Government of India directions regarding Rule 54(11). Family pension is payable to the family in case of an officials whose whereabouts are not known. Family must lodge the report with the police station and obtain a report from the police that employee has not been traced after all the efforts. An indemnity bond should be taken from the nominee or dependents of the employee that all payments will be adjusted against the payment due to employee in case he appears and make any claim. These rules are not applicable in case of officials who disappear after committing fraud, etc. Family pension at enhanced rate is payable only after a period of 7 years. Enhanced rate of family pension. If government servant dies after having rendered 7 years continuous service, family is eligible for enhanced rate of family pension from the date following the date of death. If government servant died while in service, 2 times of the normal rate of family pension or 50% of pay last drawn, whichever is less. It is payable for 10 years from the day following the date of death. If government servant died after retirement, 2 times the normal rate of family pension or 50% of pay drawn at the time of retirement or amount of pension authorized, whichever is less, till 7 years, or the pensioner would have attained the age of 67 years. Enhanced rate of family pension. If government servant died after retirement, then the enhanced rate of family pension is explained as an example. In column number 1, age of government servant at the time of retirement. In column number 2, age of government servant at the time of death. And in column number 3, payment of enhanced family pension. Voluntary retirement at the age of 40 years. Age of government servant at the time of death, 50 years. Enhanced family pension, next 7 years. If the age of government servant is 60 years, his age at the time of death is 61 years, then the enhanced family pension will be paid for next 6 years. If the age of government servant is 60 years, at the time of death his age is 60 years, 65 years, then the enhanced family pension will be paid for next 2 years. If the age of government servant at the time of retirement is 65 years, at the time of death his age is 66 years, then the enhanced family pension payable will be for next 1 year. Rule 54(2)(b), additional quantum of family pension. In addition to the family pension admissible, additional family pension shall be payable on completion of 80 years of age or above. If the age of family pensioner is 80 to 85 years, then the additional quantum of family pension will be 20% of basic pension. If the age is in between 85 to 90 years, 30% of basic pension. If the age is in between 90 to 95 years, 40% of basic pension. If the age is 95 to 100 years, 50% of basic pension. If the age is above 100 years, then 100% of basic pension. Rule 50 is about death gratuity. Death gratuity is payable to the family of the deceased government servant. If the length of qualifying service is less than 1 year, then the rate of death gratuity 2 times of emoluments. If the length of qualifying service is 1 year or more, but less than 5 years, then the rate of death gratuity 6 times of emoluments. If the length of qualifying service is 5 years or more, but less than 20 years, then the rate of death gratuity is 12 times the emoluments. If the length of qualifying service is more than 20 years, then the rate of death gratuity will be half of emoluments for every completed 6 monthly period of qualifying service, subject to a maximum of 33 times of emoluments, provided that the amount of retirement gratuity or death gratuity payable under this rule shall in no case exceed ₹20 lakh with effect from 1st January 2016. Residuary gratuity. It is payable to the family of the deceased government servant. Conditions are: government servant should be eligible for service gratuity or pension. Government servant should have died within 5 years from the date of retirement. Calculation will be done as difference between 12 times of emoluments at the time of retirement and the amount actually received by the government servant at the time of death. Service gratuity or pension plus retirement gratuity plus commuted value of a portion of a pension plus DA on pension. Let us understand the calculation of family pension through some examples. Mr. ABC dies while in service on 25th August 2018 and is survived by his son. His continuous service is 6 years. His last pay drawn is ₹50,000. DA is 15%. Calculate the pensionary benefits. Mr. ABC has not rendered 7 years of continuous service. Now his son is eligible to receive family pension at normal rate. emoluments are rupees 50,500. Emoluments for gratuities rupees 50,500 plus 15% DA, that is 58,075. Now the family pension at a normal rate is calculated as 30% of emoluments. So it comes out to be 15,150 plus dearness relief on pension. Death gratuity is 12 times emoluments, that is 12 into 58,075. So it comes out to be 6,96,900. Example number 2. Mr. BCD commits suicide on 13th May 2018. A case of major penalty was pending against him and he was under suspension for the last 2 years. Continuous service rendered by the employee was 25 years. His emoluments were 2,70,500. DA is 15%. Calculate the pensionary benefits, if any, admissible to the family. We know that in case of death of a government servant, the suspension coming to an end and the entire period spent on the suspension is treated as duty. That is, the disciplinary case is closed and the family is eligible for all consequent benefits. Since Mr. BCD has rendered more than 7 years of continuous service, the family is eligible for receiving family pension at enhanced rates for the next 7 years. So the emoluments were rupees 2,70,500 and emoluments for gratuity 2,70,500 plus 15% DA, that is 3,11,075. So the family pension at enhanced rate is 50% of emoluments and it comes out to be 1,35,250. But the amount payable is 1,25,000 because it is a maximum limit. So pension on enhanced rate shall be payable for 7 years. That is from 13th May 2018 to 12th May 2025. And the payable amount is rupees 1,25,000 plus dearness relief thereon will be paid as monthly family pension and it is at enhanced rate. Now we will calculate the family pension at a normal rate. So it is 30% of emoluments and it comes out to be rupees 81,150 plus DR on pension. So the pension on normal rate shall be payable from 13th May 2025 and rupees 81,150 plus DR thereon will be paid as monthly family pension at normal rate. Now we will calculate the death gratuity. The formula for death gratuity is half into emoluments into 6 monthly period. We know that the service rendered by the government servant is 25 years. So 6 monthly period comes out to be 50. So the death gratuity is 77,76,875. But we know that the maximum permissible limit for death gratuity is rupees 20 lakh. Now we will take another example. Mr. XYZ, whose date of birth is 10th June 1991, he joined the service as an assistant professor on 7th January 2013 at 10:45 am. At the time of joining, he has produced medical fitness certificate which certify him to be fit for the job. He dies at 11:15 am on the same day, that is 7th January 2013, and is survived by his widow. Calculate the pension and benefits admissible, if any, to his family. Scale of pay is rupees 15,600 and 39,100. Take DA as 20%. The family of the deceased is eligible to receive family pension with effect from 8th January 2013 at normal rates because Mr. XYZ has rendered less than 7 years of continuous service. So the emoluments is rupees 15,600 plus AGP of 6,000 and it comes out to be 21,600. Emoluments for gratuity will be 21,600 plus 20% of DA, that is 25,920. So the family pension at a normal rate is 30% of emoluments and it comes out to be 6,480 plus DR on pension. But we know that the minimum pension payable is rupees 9,000. So his family will receive a pension of rupees 9,000 plus DR on pension. Death gratuity will be 2 cross emoluments and it comes out to be 51,840. Even though Mr. XYZ has rendered only 1 day of qualifying service, the day of death of a government servant is treated as a working day. The family is eligible to receive family pension as he had been medically examined and declared fit for appointment. Now we will take another example. Mr. FGH, a pensioner, expires on 29th December 2012. His date of birth is 30th May 1968. Last pay drawn is rupees 45,000. Pension sanction or retirement is rupees 12,955. Date of superannuation is 31st May 2010. Calculate the family pension. This government servant is survived by his widow. So the family pension at enhanced rate will be 50% of emoluments and it comes out to be 22,500. And the pension sanction on the retirement is 12,955. So we will compare these two and we will take the lesser amount. So rupees 12,955 is a lesser amount. So the enhanced family pension comes out to be rupees 12,955. Now we will calculate the normal family pension. It is 30% of emoluments and it comes out to be rupees 13,500. Therefore, in this case, no enhanced family pension is payable since enhanced family pension cannot be less than the normal family pension. Hence, normal family pension, that is rupees 13,500 plus dearness relief, would be sanctioned to the family with effect from 30th December 2012. Now we will take the last example. Mr. IJK is a pensioner and expires on 29th December 2012. His date of birth is 30th May 1968. Last pay drawn is rupees 45,000. Pension sanction or retirement is rupees 22,500. Date of superannuation is 31st May 2010. Calculate the family pension and he is survived by his widow. Now we will first calculate the period for which enhanced family pension is payable, that is for 7 years, but limited to the date of attaining of 67 years of age. So the enhanced family pension is payable to the family of Mr. IJK from 30th December 2012 to 29th May 2035. So the family pension at enhanced rate is 50% of emoluments and it comes out to be 22,500. And the pension sanction or retirement is 22,500. So rupees 22,500 comes as enhanced family pension. Normal family pension is 30% of emoluments and this will be payable to the family of IJK with effect from 30th May 2035. So the normal family pension comes out to be 13,500. Hence normal family pension, that is rupees 13,500 plus a dearness relief, would be sanctioned to the family with effect from 30th May 2035. In this video, we have learned about family pension. If you have any doubt or want any clarification, then you can contact through the mail as shown on the screen. For other videos or rules and regulations, you can visit the web address as shown. Thank you.